The Philadelphia Semiconductor Index just dropped 7.87% in a single session. Korea's market triggered its circuit breaker. Micron shed $160 in 6.5 hours. And somewhere in the wreckage, 3 stocks are sitting at levels that actually look interesting. I'm not going to tell you the selling is over, nobody knows that, but I am going to walk you through 3 names where the price, the catalyst, and the chart are starting to line up. This is Stocktales. New here, subscribe. Free watch list in the description. First name, NVDA, closed at 200.04, down 4.13% on the day. That $200 handle? It matters. The stock hit exactly 199.99 intraday and bounced. And you could see the volume spike right at the low. Someone was buying. Look, NVDA is 15% off its May 14th all-time high of 236. That's a real correction. The stock has sliced through its short-term moving averages. The 5-day, the 10-day, all of them. It's extended to the downside. And $200 lines up with a prior consolidation zone from earlier this month. This isn't just a round number, it's a level the market remembers. The catalyst is tonight. Micron reports earnings after the close. 12 analysts have raised targets. BofA says AI demand visibility stretches to 2028. If MU delivers, and the sell side says it will, the entire semiconductor complex rips. NVDA is the first name institutions reach for. Here's how I'd set it up. Entry: 198 to 200. That's the zone where we saw buyers step in Tuesday. Stop at 190. Below that, the chart structure breaks, and the next support is closer to 185. First target, 212 to 215, where the 10-day is converging. Second target, 220, which would be a 50% retrace of the recent sell-off. Risk-reward on this is about 3 to 1, not a layup. But at 200, the asymmetry is tilting. Second name, Tesla, 381.61, down 5.79%. That's the worst performer in the mega-cap complex Tuesday. Monday it was at 405. Tuesday it opened at 393, and the bid just evaporated. It hit 379 before catching itself. But here's what's actually interesting. Baird dropped a note yesterday saying a Tesla SPCX merger is likely within 12 to 18 months. They kept their outperform rating, target 522. That's 36% above where we closed. And they're not the only ones talking about it. Morningstar's analyst said he wouldn't be surprised if a deal happened within a year. Now, I'm not telling you to buy Tesla because of a merger that may or may not happen. What I'm saying is, the stock sold off 6% on a day when news broke that actually expands the bull case. That's called a discount. The chart tells a clearer story. Tesla has support around 378 to 380. That's where buyers showed up in late May and again Tuesday afternoon. The 1-hour chart shows volume clustering right at 379, with a bounce into the close. Entry I'm watching, 378 to 382. Stop at 370. First target, 400. Round number, prior support turned resistance. Second target, 420, where the stock broke down from last week. If the merger narrative gains traction, and if Q2 deliveries on July 2nd come in strong, 400 happens fast. Third name, SPCX, SpaceX, 156.11, up 0.98%, which doesn't sound like much until you remember the stock dropped 16% on Monday and was down 4 straight sessions. Tuesday it opened at 151, dipped to 147, ripped to 165, and settled at 156. That's an 11.9% intraday range. The volatility is still there, but the direction is starting to change. Here's the catalyst. Russell Index inclusion, June 26th. That's 2 days from now. Passive funds that track the Russell are required to buy. Estimates put the forced buying at somewhere between $15 and $20 billion. That's not a typo. Meanwhile, SpaceX just issued $250 billion in bonds and got $850 billion in demand. The credit market is betting on this company. The equity market just panicked for 4 days. The daily chart shows a stock that's trying to find a floor. Tuesday's candle had a long lower wick. The sellers pushed it to 147 and the buyers pushed back. That's the first sign of a bottoming process. The 1-hour chart confirms it. Volume at the 147 low was massive, and the bounce to 165, while it faded, showed real buying interest. The setup. Entry, 150 to 156. Stop at 142. Below that, the IPO price of 135 is in play. First target, 175, which was the post-IPO consolidation zone. Second target, 190 to 200, where the stock traded before the gamma unwind. Risk-reward on this is asymmetric if Russell buying materializes. One reality check. Micron reports tonight. PCE inflation drops tomorrow. The macro backdrop is still hawkish. The dollar at a one-year high, PMI at 55.7, the Fed not blinking. If MU misses or PCE comes in hot, these setups get tested. Position size accordingly. This isn't about betting the farm. It's about having levels, having stops, and letting the setups work or not work on their own terms. Bottom line, Tuesday was ugly. But ugly markets create levels. NVDA at 200, TSLA at 380, SPCX with Russell buying 48 hours away. 3 names, 3 catalysts, 3 levels worth watching. You know the drill. Subscribe, hit the bell, watch list in the description. Good luck out there.